Hi, I am Soumya Jain. Welcome to Weekly Economic Insights, where we discuss the latest news and updates that affect your personal finances. In today's segment, we'll begin with an expert's view on the US Federal Reserve's interest rate cuts. The US Federal Reserve has cut its key lending rate by 50 basis points. This is the first rate cut since the pandemic. The new rate is between 4.75% and 5%. The Fed plans to cut rates by another half point this year and one more percentage point in 2025. This rate cut might help the US economy grow and could affect how much people can borrow for things like houses and credit cards. Let's hear what our expert Animesh Hardia, SVP Quantitative Research at One Finance, has to say.
So generally speaking, the rate cut in the US is positive for the Indian economy. The point that needs to be clear here is global growth has been lagging for some time. However, when you look at India's fundamentals, the fundamentals are strong. Although there are pockets within the Indian economy which are lagging, like the rural consumption. However, the monsoon this year should be a positive. So the main crux of the advice that we are giving our clients at this point of time is focus on diversification. Interest rate cuts are a crucial time when there is usually a lot of volatility in the market, because we have to understand the drivers of why this is done. Firstly, this is usually done in response to slowdown in growth in the larger economies, or to evade recessionary fears. So what historically evidence has shown us is that the stock markets usually, especially the Indian stock markets, they see some volatility in the short term. They may go up, but as and when economic data gets released, especially leading indicators of the economy, if they show positive signs, then the stock markets perform well. So historical episodes have been followed by some volatility. But when you diversify into, let's say, debt investments, rate cuts and episodes of or phases of rate cuts are usually a good time, because there is that opposite correlation between the prices of debt products and the interest rates. So usually this phase is a good time to get into them. If you have loans outstanding, and loans are a crucial part of your financial journey, usually the more focus is on the stock market. Loans form a large part of the portfolio of an individual. So it's usually advised to move from fixed rate loans to a floating rate loan, mainly to benefit from further rate cuts. Given where the Indian economy is right now, real estate cycle has been picking up. In fact, it has been picking up post-pandemic. So with interest rates expected to go down, real estate is also a very good asset class to add to your portfolio.
Thank you for sharing your thoughts. Let's look at how US Federal Reserve cut affected gold prices. Gold prices have reached their highest level ever after the US Federal Reserve cut interest rates. The price of gold went up to $2,592.39 per ounce. US gold futures settled at $2,598.60. When interest rates go down, it becomes less expensive to hold gold, which doesn't give any interest. The lower rates also made the US dollar weaker, making gold cheaper for people using other currencies. Experts think gold prices might keep going up. They are waiting to hear what Jerome Powell, the head of the Fed, says about future plans. Silver prices also went up, reaching a 2-month high. Platinum stayed the same at $981.10 per ounce, while palladium went down by 3.2% to $1,081. This increase in gold prices might make people think about investing more in gold to protect their money. Let's move on to increased UPI limit. The National Payments Corporation of India has raised the UPI transaction limit to 5 lakh rupees for specific categories. This new limit started on September 16, 2024. It applies to tax payments, hospital bills, school fees, and financial investments. For everyday transfer between people, the limit is still 1 lakh rupees. This change is to make it easier for people to make bigger payments using UPI. The increase is only for verified merchants in these sectors. People should check with their banks and UPI apps to see if they can use this higher limit. This change might make more people use digital payments for big transactions. It could also help businesses that often deal with large amounts of money. The new limit shows that digital payments are becoming more important in India. Now let's look at a new pension scheme for children. The government announced a new pension scheme in the union budget for children called NPS Vatsalya. This scheme lets parents save money for their children's future. Parents can open this account for kids under 18 years old. They need to put in at least 1,000 rupees to start and then 1,000 rupees every year. When the child turns 18, this account becomes a regular pension account. The children can only get the pension money after they turn 60. Parents can choose how to invest the money, like in stocks or government bonds. If needed, they can take out some money after 3 years for child's education or health issues. If the contributor dies, all the money goes to the child's guardian. This scheme might help more families start saving early for their children's future. Let's see what new rules have been announced for EPF accounts. The government has changed some rules for employees' provident fund accounts. Now people can take out up to rupees 1 lakh at once if they need it. This is double the old limit of 50,000 rupees. Also, if someone starts a new job, they can take out their PF money even in the first 6 months. Earlier, they have to wait longer. These changes are to help people if they have money problems or need quick cash. The government is also making it easier to get PF money by using digital system. This means people can get their money faster when they need it. These new rules might help workers feel more secure about their savings and give them more control over their money. Now let's look at SEBI's new rule for bonus share trading. SEBI, the stock market regulator, has made a new rule about bonus shares. Now people can start trading bonus shares just 2 days after the record date. This is faster than before. Companies giving bonus shares must tell the stock exchange within 5 days of deciding. They also need to give the shares to investors quickly. The new shares will be ready to trade on the second day after they are given out. This change starts from October 1st, 2024. If companies don't follow these new rules, they might have to pay fines. This change could make it easier for investors to buy and sell bonus shares. It might also make the stock market move faster and be more exciting for traders. Lastly, let's see how foreign investors are viewing the Indian stock market. Foreign investors have put 27,856 crore rupees into Indian stocks in the first half of September. They were doing this as they expect the US Fed to lower interest rates. Also, they see that the Indian market is doing well. Since June, these investors have been buying more Indian stocks. For a whole year, so far they have put in 70,737 crore rupees. They're also investing in Indian debt. Experts say this shows that people around the world have faith in India's economy. But some are worried that Indian stocks might be getting too expensive. This extra money coming into Indian stocks could make them go up in price, which might be good for people who already own these stocks. That's a wrap for this week's Economic Insights. We've explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.